Hey folks, Nick here recapping the day, June 9th. Busy day as far as videos are concerned. However, this is important. Today, much ado about nothing. Markets are flat except for the small caps. But had I not told you that, you would have, let's put it this way, the bulls needed an underwear change in the morning. Why? Because we had a ugly picture lining up. Here at the morning, we had a tumble down, most likely on the back of Europe issues with Greece, etc. And then recovered into the open. Then let me zoom back in, keep that in mind. We fell to about here and then fell deeper, and then I put a marker here because I saw a couple of ticks that told me this might be the bottom. Bounced right off of it, and I was like, yay, and then went right back to it. Again, I saw the same signal and didn't look back. Right here, we had the chance of breaking out. We did a little bit, fizzled, then followed through with it, all on the back of Apple. Apple was the key today. It's one of my focus points, right? Don't be scared about this. This is just a late settlement for that market action. So Apple today tumbled down, and that coincided with this second arrow I put here. So it was the flush, and that was the low of the day, and Apple rallied. It's good that it closed almost flat. It's bad that it went green and couldn't hold it, but it definitely stayed off of the 125s. 127.5, that's about $2 off. That's outstanding rebound in one day. Okay, so what did the SPY do? The SPY pretty much mirrored this because this is the ES, which is the S&P, so we won't look at it, but I will show you the trend to give you a perspective of where we are. And in fact, let me zoom out to 180 days so you'd see. You can draw a line right here. So keep that in mind and see this bar. I just put this bar here. And let me show you why. This is just the last 2 days. Yesterday, bounced off of it, meandered, fell through it, came back to it, broke it, fell under it, broke it, bouncing on it. So obviously, this is an area of importance. And if I extend it to 180 days, I can draw the same line. If I put a rectangle here, broke it, under it, broke it, under it, broke it, use it as support, 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 and here we are onto it. We better bounce. Okay, that's all I'm saying. All right, the NASDAQ, also as exciting, if not more exciting. Look at that, 4390. Remember kryptonite level? I always say kryptonite jokingly, but that's why. 4,300, that line is kryptonite. What kept coming back to it. I'm going to a full year's worth. Look at that. Ever since the correction in October, 4,300 has been pivot. Couldn't break it, couldn't break it, couldn't break it. Broke it. Bounced off, bounced off. We can't just step away from it. 4,300. Okay, keep that in mind. That's the NQ. Those are the minis of the NASDAQ. Oil today had a fantastic day, up over 3%. So that now we ask the question, what next? You know, oil. It's a manipulated market, so I couldn't tell you. But I thought that if it breaks this lid right here, it could shoot to here, and it's yet to live up to that potential, but it's there. It's a manipulated market, so who can tell? All right, so this is the price action as far as short term. You've seen messages from me to tell you what to do. Trade ideas based on questions that come from members and friends. And so now is the case. So what do I do with my trades, right? So let's see here. If I go to say, all right, so today's price action was kind of scary in the SPX. We had, you know, the SPX closed at 2080. Still exactly within range of the what we want, right? I share the ranges every day. And if I go here, I'll show you the SPX. This is the SPX, and it's well within the ranges that we tweet. 2100 is a magnet, support below, and resistance above. Well, guess what? We're at support below, and more support to come. So if somebody took a 2050, that's this is the SPX option chain that has 3 days left. So this is this week. I closed cheap risk. I had cheap risk in here, and I closed it. And it was a winning trade. I left some money on the table, 20 cents, but I made 55 cents, so I'm happy. And if I had a trade that is a potentially it has only a theoretical chance of success of 70% or lower, that's a trade that I need to either close, defend, or move. Okay, so anything that is at 2065 needs to be defended for this week. Expiration this week, okay? And same for out. So anything that has a 30% chance of going wrong, that's just too much for me. So I move it lower for a price, or buy a debit spread somewhere that would defend it, or close it and re-engage somewhere else. So this would be a credit put spread that I would be worried about. That's one level to look at and one thing to do. So if somebody has a 2050, maybe if tomorrow we open mild and nothing going on, this one would look pretty nice and one can book some profits. Also, sometimes I close the trade even if it's not profitable just because I'm too worried about it. There's something to be said about the intangible of being able to sleep with a clear conscience. So today I paid 20 cents in order to be able to sleep without having to worry about tomorrow whoosh down, because I no longer have risk for this week that expires if we had a market drop for whatever headline, then I'm not pinched. And it's usually the current week trade that go bad fast. Okay, so this is just how I would manage an SPX. So if you wanted another idea as to, other than an SPX, how about let's talk to SPY maybe. So if I have a SPY trade that is bullish the SPY at 207, and currently the SPY is at 208.5, so $1.50. That sounds like a lot of distance. However, it's borderline where I would need to defend it. Now, it was part of an iron condor, and I've collected a lot of premium, and I still have a couple of pennies I can play around with, and I'm quick with the trigger. Maybe I'll delay it a little bit, but my rule is no questions asked. If it's 70% or less as far as success, meaning if it's got a 30% chance of failure, I'm out. How can I determine that? Most platforms give you a number, a probability in the money. In this case, it's bad for us to be in the money. So if this number is 30%, that means it's got a 30% chance of going wrong on me. I'm out, or I'm defending, or I move it down for a little money. So if it costs me 15 cents to move it down $1 and get myself down to here or here, I'd do it. Okay? If it was part of an iron condor, then this one is losing a little bit money on paper. This one is winning, so I'm still balanced. I may be able to delay that decision. It's personal preference. My preference, 30% chance of going wrong, it's no longer worth my effort. I do something about it. Okay? All right, so this is how I would trade. Meanwhile, the ranges are still in effect, and they're still working out nice. So let's go to the SPY. And today's SPY is a doji, so indecision. The good news about that is they opened, boy, we were all scared, and the market was like, the VIX was up big, and it closed down 5%. So overdone on both ends. They tried to run it, they couldn't hold it, they closed about where they opened, which is okay. All right? It's not okay if we continue on lower tomorrow. That's the SPY. Volume decent too, so it is a good statement, a statement to be heard. The IWM, we're still in the middle of the range of expectations. I told you 124.5 was the battle last week, and it spilled into this week. Look at where it's at, 124.4. So, and look at the tail left behind it. That's a good tail to leave, meaning they tried to sell it all the way down to here, but they defended it not quite to the open or green. They still closed red, but way off the low. The low was eyeballing at 123.4 or something. So that's a good, strong statement. But look at that. X marks the spot. We're back to that spot of X. Get that out of here. How about the Qs? And on better volume than yesterday. That's the NASDAQ. Same tail, same doji. Yeah, it's indecisive, but it definitely, there was no indecisive anything about the fact that they rejected the lows. But now look at that. 4 red candles, droopy. So now we start looking, okay, what happened last time we came to here? We bounced here. We bounced here, we bounced here. So now I look at levels. So I'm looking at, I just drew this today, this yellow level right here as must hold, you know, plus or minus a few pennies, right? It's You can draw it as a box, which coincides with this box that I've drawn from before. And let me zoom out to, I can't remember why I drew this, so I zoom out. Okay, that's why. It was an area where we failed, we failed, we failed, we failed, we finally busted through. Used it as support, used it as support, and here we're coming, we used it as support, and here we're coming to it again. So we better use it as support. And we do have this white ascending channel. It's only 7 months old, 6 months old, whatever this period of time is. But I could extend it further. And I do have this red one from a longer time. That's like 2-3 years old. And I have this line here. So I have some levels to look at. So there's no panic yet, and there's end in sight, provided there's no shoe to drop, new shoe to drop. Okay? So this is my perspective on things based on today's. So worried, yes. Panicked, absolutely not. Upside potential, still there. Am I scared from the short positions that I have? Yes. Enough to close them? No. I'm only closing winners, sticking to my principles. And do I engage long here and there? And only on good names. For if I wanted to go long a good name, I mean, Apple is as good a name as any. I shared with you a couple ideas there. So this video is not just a recap of what happened today, but also how I manage my portfolio and the portfolio that I've been sharing with you. For example, over the last few months, I've shared a lot of credit call positions which are bearish. I've used long distance ones for the RUT, for example, for December of 2015, which we started last December, if not November, and we collected over $1 for. Now they're 40 cents, 50 cents to close. So there's, if you did 10, there's an easy $500, easy yield. It couldn't get easier than that. I didn't even mention it except to say book profits twice. So now we've done 50 cents, 50 cents, that's $1. And now we're back to 50 cents again if somebody can book it, so it's $1.50. So it's already paid $1.50 on the total risk of 10. So it's already yielded, quick math, like 17% on dollars at risk. We only risked $10 widespread. And I offered the same position in the IWM, similar position. That's also profitable. So what I do on days like today, where prices whoosh down without a change in fundamentals, I book some profits. For example, I also shared quite a few credit call spreads for people who have bigger margin accounts that paid big bucks in the NASDAQ. And one of which was July 47.50, 47.75. Yes, folks, 47.50. And at the time, somebody paid me over $3 to open the risk. I said, I'll take it. And now I'm closing them for between 60 and 75 cents. So I'm booking some profits, leaving some on. Similar situation with the January 45.95 that you saw that I posted. Some 45.95 NDX that came under fire recently, but now are almost complete winners. Some September 48.75, 4900 shorts. So those are over $1 profitable. So many trades. And on days like today, I book some profits and look for opportunities, or look for opportunities to offset them with some longs. And I haven't done many of those. I sporadically shared them with you. And that's how I've been managing a winning portfolio for the last months. I don't know, 10 months maybe. And it's been an easy trade, relatively speaking, provided, and this is the big if, big assumption, that you stick to the rules that you set yourself. I have rules. I close cheap risk. I don't push a trade. If a trade doesn't happen, I don't push it, meaning I want my yield. I want 5 to 8% if I get more perfect. I want 80 to 90% chance of success to start out with, and I want a balanced portfolio. And I always manage my risk, which means I close early. If profitable, I close early if it starts to go wrong, or if it's wrong completely, and I defend as soon as it warms. Okay, so doing this leaves me with a healthy portfolio, and I suggest you do the same. If you have any questions about any of this stuff, let me know. You know me, I'm always available to answer questions. Nick, signing out.